Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, briefly, we're starting with the Asian markets. Closed mixed on Monday following a rally on Wall Street last week, as of course investors continue to look out for comments from central bankers on the trajectory of US monetary policy. Looking at the Chinese markets, absolutely bucked the general positive trend across the rest of Asia to close in the red on Monday. The Shanghai Composite Index closed 20 points or 0.54% lower at 3,611 shares of Chinese banks, of course, and brokerages all closed lower, and China's onshore yuan Monday fell on its lowest level against the dollar since August, as offshore yuan continued to decline. The People's Bank of China, the midpoint rate, of course, at 6.3867 per dollar. In Hong Kong, the main index Hang Seng continued its choppy session, falling back into the red. Again, it traded 100 points or 0.45% lower. The Japanese markets, however, remain closed for Labor Thanksgiving Day, as the yen and the dollar were quoted at 123.15, up 0.2% on the day. Trading activity during Asian sessions was thin due to public holidays in Japan, but the euro, however, extended losses in the European region against the dollar on Monday, hitting a 7-month low versus the USD, on expectations that the European Central Bank will, of course, ramp up its monetary stimulus next month. Most major banks, however, have stuck firmly to the view that the euro will fall towards parity with the dollar in the months ahead, as, of course, the Federal Reserve begins to lift interest rates, while at the same time the ECB takes the opposite course. Comments by European Central Bank President Mario Draghi on Friday reinforced expectations for the ECB to unveil more monetary stimulus at its policy meeting on December 3rd, renewing, of course, the pressures on the shared currency. Draghi said the ECB is ready to act quickly to boost anemic inflation in the European zone. The euro, however, was at 1.061114, down 0.3% on the day. The euro slipped to 1.06, its lowest level since April. Gold in the commodity sector languished to close near 6-year low on Monday, hurt by robust dollar and upbeat comments by Federal Reserve officials regarding US rate hike next month. Spot gold had fallen 0.3% to 1074.91 an ounce in early Asian trade, extending its Friday 0.2% drop. Speculations, of course, that the Fed will lift interest rates for the first time in nearly a decade this year has intensified since the release of strong US job data early this month, which of course triggered a sharp drop in gold prices. Crude in the energy sector futures lost ground in early Asian trading on Monday, with US oil plunging over 2% on fastening worries over a global supply surplus. US crude West Texas Intermediate January contract had dropped 78 cents or 1.86% to 41.12 a barrel during the Asian session. It hit around 40.96 a barrel earlier in the session, nearly the level seen on Friday before the US crude December contract is expired. With, of course, the US dollar index hovering near 100, we expect to see slightly more downside than upside. This would mean that oil prices should be holding steady this week, and of course should mean that supports around the $40 a barrel level should hold. That's all for today. Nothing major in the calendar. However, still, Tier 1 and Tier 2 events are also to be slightly volatile. Thank you for watching. See you next time. Bye-bye.